Okay, so let's get started with preparing for the new rule for HMDA. Per the CFPB's former director, Richard Cordray, regulators are focused on and want to keep an eye on the mortgage market because it's considered the largest consumer finance market in the world. HMDA helps regulators keep a watchful eye on the trends and problem areas in this market, so this isn't going away. Also, what we're learning today may change how we do things or be updated because of system or Encompass updates. So watch your emails for updates to the processes. This is going to be just a general overview of the changes so you can expect more to follow. So now let's talk about how this is going to impact you. HMDA has been around since 1975. It was enacted by Congress and implemented by Reg C. So this is nothing new, and what HMDA is for is really just for data collection purposes. So let's kind of review the main purposes to HMDA. The first one is in determining if financial institutions are serving the communities that they're in. This one really plays into CRAs and programs like that. Now, the second one is not really one that's thought about much or maybe even realized by many, but public officials, city municipalities, they use this data to attract and improve the private investment environment. Now, the third one is the one that we're most familiar with, and this is in identifying potential discriminatory lending patterns in the lending process. Regulators and public officials, they do use this data to determine if there are any inconsistencies with our policies and procedures and decision making. They look for patterns or practices where entire communities and certain people within the communities were not treated fairly or consistent. So this is a big initiative of the CFPBs. Now, who has access to this information? In the past, HMDA was published each year in September for the previous year's data and released to the public so that anyone, including consumers, public officials, community groups, researchers, developers, and a developer might use this information to see if there's a need like for affordable housing in development areas, or journalists. And journalists, they want to investigate the information, analyze and write about it, and that could be either good or bad. And the banks themselves can obtain this information and use the data. Now, HMDA is a very big rule with many changes and additions to what is being reported, but not as many changes to the information provided to us already. Most of this information is already on the application that we collect from the borrower. So just to kind of go through what this applies to is all closed loans, end loans, or open-end lines are now reportable. And this is very different because it must be secured by a dwelling, like a cash-out refi that was used for debt consolidation and home improvement. Those are now reportable. Or a home that somebody wants to upgrade their kitchen and they pull out money out of a boat or a car or something else that is not a dwelling. If they used it for home improvement, that would have been a reportable loan. Now it needs to have a dwelling, so now that would not be reportable. They just made it a little simpler and a little more structured for understanding of what is reportable and what isn't. Manufactured homes and other factory-built homes are now reportable, multifamily. So you can see there are a lot of changes to this and additions in areas that do affect us and also don't affect us. And why do you need to understand HMDA? There isn't a form that the borrowers are going to sign and the loan officer is going to be able to explain what it is. So loan officers are going to have to understand this, dig for further information, and explain to the borrower why they need it. In addition, the borrower is going to be answering questions on information that they've never been asked before, like online, especially if borrowers have done loan applications before and have filled this out many, many times. It's going to be confusing and different for them to answer these questions in the demographics portion of the application. And it's up to the loan officer to gather this correct information and update upfront and make sure that they've got it completed in all the necessary fields. But more importantly, it's also more than just origination. Everybody is responsible for correct and accurate HMDA data. There's also fields for other departments to complete, not just loan originators. LOs need to complete and gather the majority of the information, but there are new fields to complete or monitor for processing, underwriting, disclosing, post-closing, shipping, accounting, reporting. It is a true team effort, and in order to complete this so that our information is reported accurately. And we've also heard from the field already that this information is not needed or it is unnecessary. But there is severe penalties in civil and if we do not follow HMDA, fair lending issues could come into play. So we all want to make sure that we follow this. Now, there are also 4 main areas of information that are really for HMDA. The borrower information, that includes your demographic information, ethnicity, race and sex, age, the underwriting process and decisioning, credit score, DTI, AUS results. The information then, there's property information, the census tract, the address, the value, the construction method, is it a manufactured home, multifamily, how many units, and we get into the loan information. And that's where we talk about the loan features, rates and pricing, closing costs, loan types, non-amortizing features, and so on. And then lastly, we have identifying information. This would be information about our LEI, our ULI, our NMLSs, and property information, other property information for identifying. Your LEI is like the barcode for MUIs. That's who we are. That's our number specifically. The ULI contains the LEI and the loan number and then a couple of other digits. And this identifies the loan through the life of the process of this file. And then the NMLS, of course, which is your number that is also on these files. Now, we get into some other data fields. Some of the areas that we have, and this is broken out on the Borrower Summary MUI screen, and that is for channel retail, which is your retail or broker selections. At the top of the Borrower Summary MUI, above the current status, most of our loans, 99% of them, are bank to retail, and that's where we underwrite the files, we fund it in our name. But if we get into a situation where we cannot do that and we have to broker it to another institution based off of qualifying, then we would change it to brokered. We have a lot of those templated already. However, not all templates are set up because we work with so many different companies and they may be unique. And that's where you would need to change that to a brokered channel if that is the direction that you're going with your file. This data also pulls over and autofills in the HMDA form. So a lot of the data that we have, it's not like you're going into the HMDA form and punching in all this HMDA data that's new and that we now have to obtain. Actually, most of it just kind of autofills over. Like your NMLS, that will autofill over. And your NMLS is already in the loan application. And that stays with that file again until the loan is sold or it's and refinanced or it's paid off. And then we get into income. Income is reported, and that used to be reported before, but now they're also using it in conjunction with the credit decision. The income that we use is part of that, as well as borrower credit scores and the models we use to obtain that credit. DTI, CLTV are now reportable. Also, the total loan costs and application date are all part of this, excuse me, are all part of the reportable data field. The application date, just so you have that, is found on the disclosure tracking page. The date is at the top of the Bauer summary screen, excuse me, and that is the file started date. That is not your application date. Your application date, again, is on disclosure tracking, and that is what we use when the disclosure desk triggers that application after we have all 6 pieces and are ready to send that out. So just wanted to point out the difference there. The loan costs, the points and fees, origination, discount points, lender credits, occupancy, loan amount, loan type, interest rate, loan term, lien status, these are all part of our report now. And this is all something that the CFPB wants to see. And the rationale behind this from the CFPB is that information is going to help the regulators determine how the ability to repay rule is impacting the market, but it's also going to help the Bureau monitor developments in specific markets such as multifamily, affordable housing, manufactured housing, to see how they are used across the board and available to consumers. Then we get into loan purpose. This is a little different. The loan purpose it's important, and you need to understand how this is reviewed by regulators to know what questions to ask the borrower. If you have a purchase, for example, then you select on the loan side where it says purpose of loan, purpose, cash out, no cash out, construction. And if you select the purchase, it's a purchase. Now, if you look to the right of your screen, you're going to see HMDA loan purpose. And then at the bottom of the screen, you can see the different drop downs from that HMDA loan purpose. Then you select home purchase. And the sync with subject address, that needs to be checked so that the address, the subject property address that the borrower is purchasing, filters into this HMDA form. Now, the difference is if this is a cash out refinance. If it's a cash out refinance and the purpose of the loan for HMDA is to buy a house or to improve another house, not necessarily the subject property, then the purpose of the loan on the application for a cash out refinance will be cash out refinance. But on the HMDA loan purpose, it's going to be home purchase. The address is not going to be synced with the current subject property address like a home purchase was on the previous example. It's going to be hand typed in for the address that they're buying. Now, if this is a cash out refinance for the purpose of loan on the application, and then the HMDA loan purpose is a home improvement, then we need to have the address of the house that they're improving. If it's improving the subject property, then you sync the address. If it's that they're taking the cash out of. If they're improving a different property other than the subject property that they're taking the cash out of, then you type in the new address. So that's, if you look at the bottom of that screen, and this is all on the Bauer Summary MUI screen. So if you've got further questions, please let me know. Now, we get into some further data fields. HOEPA status, we've had that before. We do not originate HOEPA loans or high-cost loans. And then we also have loan type like FHA, conventional, VARD, etc. Construction method, if it's, is new, it can be either site-built or manufactured home, and that's found on the HMDA page, or it's actually also on the Bauer Summary Origination screen under the, I believe under the property, you'll see that construction method, please make sure you complete that. Also, the full address of the property is now reported, and this is new. Prior, it was just the census tract information that was reported, but now it is both. So remember to report the correct address on the refinance, like we talked about earlier, for loan purpose. The county was collected, and the census tract information was all in there. Just make sure that that is completed, and processing will need to make sure that is pulling into the file prior to closing. The property value, total number of units, are something the loan officer completes at application. And manufactured home and the secure type or land or interest is also something that is new. So let's do a knowledge check. You have someone that is cashing out of their current property to buy vacation property. What information do you think you need? Nothing, just mark it as cash out. The address of the current property, because that's where the cash is coming from, or the address of a new property because that is what the cash is used for. The address of the new property because that's what the cash is used for is the answer. Let's do another one. The borrower didn't have a property picked out at the time the application was started. 3 days prior to closing, a purchase contract was signed. There's a 10-day period to complete the inspection and decide to move forward on the property. Should we add the property to the file, and why? Yes, absolutely. You should add the property to the file, and that is because it can change your debt to income ratio and qualifying, because we are adding additional debt, taxes, insurance, and things like that to that property. So absolutely, it needs to go back to underwriting and be reapproved for a clear to close. Absolutely. So let's talk about the next area of the HMDA demographic information. That is also new. They changed from government monitoring to demographic information. They did some consumer testing, concluded from the consumers that being called government monitoring, it was creepy. And the words government monitoring sounded very distasteful to the consumer. The CFPB changed that information to demographic information because it seemed friendlier and more consumer compliant and less creepy through the consumer eyes. I mean, just really say the words out loud to yourself. Now it's time to collect your government monitoring information. All right, let that sink in. It gives me the creeps saying it, so you can see how it could lead to anxiety from the borrower's perspective. And many applicants, old or new, are uneasy about providing information to the government. So just be cognizant of the terms that you use for this. Now, for consumer purposes, you have to talk with them about this, and it's going to be important that you are the expert, know how to ask the information and answer the questions the borrower may ask. Data is collected face-to-face, which also includes online, video, or Skyping. This is the only one that if the borrowers say they don't want to provide, that you have to make a visual observation or use surname. Phone, mail, and internet, if the borrower decides to not provide, we honor that. And that is no different than before. Here is a look at the demographic information addendum that will be attached to the 1003. Now note on here that you understand the demographic information for the purpose of collecting this information is to help ensure that all applicants are treated fairly and that the housing needs of communities and neighborhoods are being fulfilled. For residential mortgage lending, federal law requires that we ask all applicants for their demographic information, ethnicity, sex, and race, in order to monitor our compliance with equal credit opportunity, fair housing, and home mortgage disclosure laws. You are not required to provide this information, but encouraged to do so. You may select one or more of the designations for ethnicity and one or more designations for race. The law provides that we may not discriminate on the basis of this information or whether you choose to provide it. However, if you choose to not provide the information and you have made this application in person, Federal regulations require us to note your ethnicity, race, and sex based on the basis of visual observation or surname. The law also provides that we may not discriminate on the basis of age, marital status information you provide in this application. If you do not wish to provide some or all of this information, please check below. So the CFPB requires that we are to give this note that's in red to the borrower, and that it should be part of your regular conversation. So when you're on the phone with them, you need to explicitly read this to them, and then go through the ethnicity and let them decide if they want to select any of the subcategories and what they want to provide, or if they want more than one. They can pick as many as they would like. So let's get into this a little bit more. The demographic information, it does consist of three main categories. It has ethnicity, which is Hispanic or Latino, not Hispanic or Latino. Race, American Indian, Alaska Native, Asian, Black, or African American, Native Hawaiian, or other Pacific Islander, and then sex. This is the same. It looks the same. It is the same. There's nothing new. So that's good, right? So now let's talk about the disaggregated information, or what we call subcategories. This means that we're taking the information from race and ethnicity and then breaking them down further. The main category is ethnicity for Hispanic or Latino, and then the subcategories would be Mexican, Puerto Rican, Cuban, or other Hispanic or Latino, and the borrower can write it in. Or if it's on the phone and they give it to you, then you can write it in for them. So if you are face-to-face and you have to choose, you are only picking from the main categories and not the subcategories. So if it's anything other than face-to-face, you have to read them to the borrowers to make sure that they understand and they can select on their own. So not much has changed with this outside of by phone. Now, for race, the main category is American Indian or Alaska Native. In order to select this, we do need the name of the tribe. And it says enter the name of enrolled or principal tribe. However, if the borrower writes in there something, and that's what they identify with, we are not to change that. The CFPB wants to respect the borrower's ethnicity, race, and sex, and how they identify. Asian, same thing. You've got all the subcategories below: Asian, Indian, Chinese, Filipino, Japanese, Korean, Vietnamese, and then other. So whatever they select in the other, we leave it. It's okay. If they misspell it, that's fine. You leave it the way it is. We report the way they have it. Then, if you are doing a face-to-face, there are some additional boxes that are going to pop up. And it is important to make sure that you answer them correctly. Because remember, TRID requirements for a face-to-face application require what signed documents for disclosures. However, with e-sign technology, we are checking to see if that has changed per TRID as well. So more updates on that to follow. Now, to answer the face-to-face questions, you can see on the first picture there was the ethnicity of the borrower collected on the basis of visual observation, yes, no, or not applicable. And then answer all the questions below. And remember, if they don't want to provide, you still have to complete the main categories. For sex, male, female, or I do not wish to provide, if the borrower chooses male and their name is Nancy, changing this or asking if this is correct is not an option. We leave it the way they select it because that is how they identify with themselves. If the borrower receives e-disclosures and notices the selection and calls you and says, hey, it's wrong, and they want to change, then we can change it, but make sure to obtain an email from them asking you to adjust it. The CFPB says it should not be changed. But then if they say it's up to the borrower and we have documentation that the change is coming from the borrower, we will be fine. But we need to have that documentation. And if the borrower chooses male and female, because that's how they identify with themselves, we leave it that way, and that's how we disclose it. If the borrower says in a face-to-face they do not wish to provide this information, then you will need to make a visual observation based from surname, or just, and if the loan comes in any other way, that's we just leave it. So from face-to-face, visual observation and surname. And you have to let them know that, hey, based from this is what I need to do. And then they will decide if they want to just keep with that decision. Also, if you have no co-borrower on your loan, please, please, please check the box that there isn't one on the borrower summary MUI screen. This will gray out the demographic information on page 3 of the 1003 for the co-borrower. What is happening is when we select, if we do not have that box checked and we try to send this information to the CFPB, our reports are erring because it's not completed for the co-borrower. The report thinks that even though there isn't a co-borrower name, the demographic information is blank, so then it sends an error and says, hey, this is wrong. And this is a way to fix that on the report. So let's do some scenarios. The borrower reports more than one ethnicity. Should you correct it? Nope, don't correct the borrower. Just report what they've provided. A borrower applies by mail, online, or by phone and fails to provide demographic information, but also fails to check box, I do not wish to provide this information. What should you do? If you meet with the borrower in person to complete the application, you must ask for the demographic information. If they decline, then you report that they've declined and leave the disaggregated subcategories blank. If you do not hold an in-person meeting until after the application process, then you are actually not required to collect their demographic data at all. So the borrower does their application online and does not mark the main category of Hispanic or Latino, but marks Mexican. Do you check the box Hispanic or Latino? Nope, you can leave it as is. And borrower provides demographic information, but also selects, I do not wish to provide this information. Then before disclosures are completed, you finish the application in person. If disclosures are not completed yet, you are finishing the application, you would ask the DI information just like you would for any face-to-face application. If they still choose to not provide, you have to make visual observation or choose based from surname from the main categories. How the application is finished is how you mark the application. If you meet the borrower after disclosures are sent, do you change it? No, you leave it as it was disclosed. All right, let's get into the automated underwriting system. Use the AUS tracking tool every time you run a file through LP or DO. Deanne sent out an email with explanation and instructions about a month and a half ago on this. Please make sure that you are using this properly. What this does is it allows us to track the DO or LP runs. When you run it through the Services tab, it does not track it. It puts it in the E folder and that's it. By using the Tools tab, go to AUS Tracking, request your underwriting results through there. It will record the AUS tracking on that tracking page so that we can report this to HMDA because this is now reportable. Underwriters will then also, and processors will review and put the information in the AUS system and AUS recommendation that's listed on the borrower summary page where the HMDA tool is. So please do not use the Servicing tab. So let's talk about the HMDA action taken. This is something that is on the borrower summary MUI page, and it's called current status. It also can be found on the HMDA page, but this is really important to complete. The loan originated is done once a loan has been shipped to the investor, and that is taken care of through shipping. Application approved but not accepted is if the borrower has been approved by underwriting, but yet they do not accept the terms we give them. Application denied by an underwriter or a pre-qual is a denial. So if the underwriter denies it, that's then they complete out the statement of denial, change the status, and write the reason also in the box. And then the disclosure desk will then send out the statement of denial to the borrower and move the file to the appropriate file. When you are doing a pre-qualification on a borrower and you pull credit, you've got your application, you pull credit, and your credit score is a 480. You know you're not going to be able to get this done. So you are denying this file based from credit. Complete the status to denial and write in the box that it's because of credit. Again, the disclosure desk will send out the statement of denial to the borrower and move it to the appropriate file. Application withdrawn, the borrower expressly decides to not move forward with the loan or goes to a different lender, etc. A credit decision has not been made. We note in the conversation log and a copy of the email received from the borrower expressly withdrawing from the file, and then the disclosure desk, you change status, the disclosure desk will take care of it from there. Now, file closed for incompleteness is a little bit different. You use this if you have requested documentation to complete a credit decision. Need further information to complete the application. We send the borrower an incomplete notice, which is in Encompass. And when you select that letter, it brings in all the borrower information so you don't have to type that. Then you can hand type the information that is required, and then you put a time frame on there. Like if there's no response after 30 days, then the file will be canceled. And then we don't have to do anything else if the borrower does not respond to us. This is their notification. We don't have to send out an additional statement of denial. We can just cancel the file and move it out and move it into that file closed for incompleteness folder. If they come back to you, any of these borrowers at any status, if they come back to you and decide, yep, I want to try this again or I want to move forward, you can copy that file from any one of those folders and start a new file with updated information. So if after disclosures have been sent on a file closed for incompleteness, and we are not getting a response from the borrower, then the file can be declined and file closed for incompleteness and then moved to the appropriate folder. Now, a purchase loan is if we purchase a file from another investor. Pre-approval request denied, underwriter denies it. They review it prior to disclosures, underwriter denies it, and then we move it to that folder, but we need a commitment in the file or a denial from the underwriter in the file. Pre-approval request approved but not accepted. Again, this is prior to disclosures. You're getting this checked out to make sure that the file is going to work, and the underwriter approves it, but the borrower doesn't accept our terms. And then the pre-approval then request would be approved but not accepted. So as you can see at the top here, current status, the active loan then is changed to another status. The date is cannot be backdated because of reporting to the different regulators. It's going to automatically update for you. Then please complete the reason the action taken is changing. There's a box down here. Please make sure that you complete that. It's right underneath the active or the current status. And then we report up to 4 denial reasons to the CFPB on the HMDA report. Let's do a knowledge check. What do you select if we obtain an appraisal on a file, but the appraisal does not support the assumed LTV? We are not able to increase the loan amount further? The application would be denied. The borrower submits you an incomplete application and you are not able to do a pre-qualification. What is your next step? You can send them a notice of incomplete application requesting the documentation, give them 30 days to respond, put a copy of the letter in the e-folder. If no response, close out the file as file closed for incompleteness. Call them instead of sending a letter, but note your full conversation of the requested documentation in the conversation log and let them know you will need to close out their file for close for incompleteness within 30 days if we don't receive docs back. Or do nothing and let it sit in your pipeline and wait for a call back. You can do either one of these two, the first two. Obviously, the first one, if you notify them with the document in the file in case it's pulled for audit, if the borrower does not respond, we can close it out for incompleteness. But if they do not respond and let you know they are not moving forward, you want to change it to borrower withdrawn. So what tab in Encompass do you run, LP or DO? The Tools tab. You started an application 2 months ago for a TBD purchase and it was a face-to-face. They call you today and say they've accepted a purchase agreement and want to move forward with their loan. How do you mark the application taken before sending disclosures? Face-to-face, internet, or telephone? Telephone, because that's your last communication and that's how you triggered the disclosure. You got all the pieces. Let's do a couple housekeeping items. You have new data templates and input templates. They have to be updated on all files in your pipeline to be originated that were started prior to 2018. Because they will not have the demographic information on them. So please make sure that your files that you started in 2017 that you're still waiting for information on, that you update that information to the new data templates and the new demographic information and updated information for all the other spots that have to be completed. And also, this is a really awesome time to clean up your pipeline. Go through, talk to your borrowers, and gather the additional information, find out if they want to move forward, and if not, then cancel these files out so that we can keep track of a cleaner pipeline. So just so you have it, Encompass screen, this is the old Encompass screen. There's very little information that is needed. You know, I mean, obviously a lot of information pulled through, but there were only really 28 fields. And now we have a lot more fields. And so the good thing is that most of it pulls over, and the demographic information is crucial in being completed. And if you have any questions regarding this, please reach out to me. I would be more than happy to assist you. And smile. Just, it'll be fine. There's not that much information that's changed. Trust me, it's going to be fine. Thank you for your time today on the HMDA webinar, and I hope that you enjoy a great 2018.